What if the entire financial system was trying to warn you, screaming at you that a collapse was imminent? Because right now, it is. There is a glitch in the system, a secret signal that has a 100% success rate at predicting every single economic disaster of the last century. It flashed bright red right before the 1929 Great Depression. It flashed again before the 2000 dot-com bust. And it flashed a third time right before the 2008 global financial crisis. Well, right now, that same signal is flashing again. But this is the fatal flaw. This time, it is not a normal warning. The signal is deeper, it has lasted longer, and it is more extreme than anything we have seen in modern history. The unspoken reality is that this signal is warning us that what is coming, what is already happening, will not just be another 2008. It will be worse. While the gurus and the news are telling you to look at the strong stock market, they are lying to you. They are selling you the illusion of safety. This video is the antidote. We are going to expose the glitch they are praying you ignore. To understand why this signal is a 100% kill shot, you have to first understand the fatal pattern, the exact same trap that unfolded in 1929 and 2008, and why the dumb money always ignores it until it is too late. Make sure you have subscribed to this channel to get updated about these kind of extremely important topics. To understand why this signal is a 100% kill shot, you have to first understand the fatal pattern, the exact same trap that unfolded in 1929 and 2008, and why the dumb money always ignores it until it is too late. This signal is called the yield curve inversion. It is a simple yet terrifying indicator that has predicted every major recession for the last 100 years. To see its power, we must go back to the late 1920s. The world was dancing on endless optimism. The stock market was booming. People were buying everything on credit, and headlines screamed about new eras and permanent prosperity. But quietly, in the background, something shifted. In 1928, the yield curve inverted. This means short-term interest rates suddenly rose above long-term ones. Think of it like a bank charging you more interest for a 1-month loan than for a 10-year mortgage. That is backwards. When it happens, it means money is getting tight, liquidity is drying up, and the entire financial system is bracing for impact. The fatal flaw is that people ignored it. Stocks kept climbing for almost 2 years after that inversion. The market gained nearly 50%, while the warning light kept flashing. Everyone thought it was different this time. But by 1929, the dream ended. The Dow Jones collapsed by 80%. Unemployment soared to 24%. An entire generation learned what happens when you ignore the signals. Fast forward to the early 2000s. The internet had changed everything. Technology stocks were soaring, and the economy looked unstoppable. But in 2000, the yield curve flipped again. Months later, the dot-com bubble burst. Then it happened once more in 2006, this time before the housing crash. The curve inverted, warning that the financial system was under stress. But the market still rallied for another year and a half. The economy looked strong. Unemployment stayed low. The Federal Reserve kept raising rates. People said, it's not the same as before. And then, in 2008, the entire world fell into chaos. Banks collapsed, homes were lost, trillions of dollars evaporated. And once again, that single line on a chart had predicted it all. This is the guru trap, the pattern of false confidence that always precedes the storm. This is why a strong stock market is often the illusion that hides the impending collapse. Guys, it takes a lot of time to research about the stuff to give best and valuable videos. Don't you think I deserve subscribe and like, huh? Now, look at where we are today. The echoes of 1929 and 2008 are not just faint whispers. They are a screaming alarm. In August 2022, the yield curve inverted again. But this is the unspoken reality. It has not just inverted, it has plunged to depths that match and in many ways exceed both 1929 and 2008. And crucially, it has stayed inverted for longer than anyone alive has ever seen. Yet just like before every major crash, the surface looks deceivingly calm. Stocks are rallying. Unemployment is near record lows. The economy still appears strong. This is the guru lie. People look at the markets and think, see, everything is fine. They point to the strength on paper and demand that we ignore the warning. But that is the same illusion we always fall for. the calm before the storm, the false confidence that comes right before the breaking point. Because when the yield curve stays inverted for this long, it is not a false signal. It is the sound of immense pressure building. It is the moment before something snaps. Back in the 1970s, yield curve inversions led to recessions almost instantly. The moment the curve flipped, the economy cracked. In 1973, oil prices exploded, consumers panicked, and recession hit hard and fast. The same thing happened in 1979.
The signal appeared, and within months, crisis hit.
But today, things have been strangely different. When oil prices spiked in 2022 due to the war, the world braced for another 1970s-style crash, and it never came. Why? Because consumers still had more than $2.5 trillion in extra savings left over from the pandemic stimulus. That cushion acted like armor, hiding the damage underneath. People kept spending, businesses kept hiring, and it looked like the economy was invincible. But those savings are disappearing now. Credit cards are full, delinquencies are rising, and that invisible shield protecting the system is fading fast. When it is gone, the real impact will begin. The delay has not removed the danger. It has only guaranteed that the eventual reckoning will be far more severe. Guys, I'm getting good views on my videos, but not good subscribers. Why? Don't you like my videos? Just give me a favor. Just comment below your insights about this video. The danger is not just the inversion itself. It is what it represents. Think of the yield curve as a map of time. Normally, investors expect higher returns for lending money longer because the future is uncertain. But when they start demanding higher rates for lending short-term, it means they are terrified of what is right in front of them. They would rather lock up their money for 10 years than lend it for 6 months. That is how deep the fear runs. And the deeper that inversion goes, the worse the crash that tends to follow. In every single case from 1929 to 2008, the depth of the inversion predicted the depth of the recession. Shallow inversions led to mild slowdowns. Deep ones destroyed economies. Today's inversion is one of the deepest ever recorded. That is why this moment is not like any other. Right now, investors and analysts are repeating the same lines we have heard for a century. They say, "The system is different now. The data is strong. The models do not apply anymore." But the unspoken reality is that human nature has not changed. In 1929, people believed technology had made crashes impossible. In 2006, they believed housing prices could only rise. And in 2024, people believe artificial intelligence will keep the economy alive forever. Every generation has its fantasy, its reason to ignore the signal. And every time, reality wins. This illusion of strength, this false sense of calm, is not a sign that the danger has passed. It is the crucial psychological trap that always precedes the fall. The longer this illusion lasts, the more catastrophic the ending will be. Because the delay gives people false hope. It convinces them the risk is gone. They double down, borrow more, and fuel the very collapse that is waiting ahead. Here is what is even more disturbing. This is the fatal difference that makes today's signal far more terrifying than 1929 or 2008. The last time the yield curve was this inverted, the world was not drowning in debt like it is today. Back in 1929, household debt was small. In 2008, it was primarily housing-related. But today, debt is everywhere. Mortgages, student loans, auto loans, credit cards, and record-breaking government deficits that now exceed $38 trillion. The entire global financial system is built on borrowed money. It is a house of cards constructed on cheap, zero-interest loans that have now exploded in cost. When the cost of borrowing stays high, something will eventually break. It is not a question of if, only when. A family that borrows too much eventually has to stop spending. A business that refinances at double the rate eventually has to fire workers. A government that owes more than it earns has to print more money, or ultimately default. This is not speculation. It is cold, hard math. The yield curve is showing us the precise point where that math stops working. This is the unspoken reality. We have already seen cracks forming. Corporate bankruptcies are rising. Consumer delinquencies are quietly increasing. The cost of financing debt has doubled for small businesses. While headlines celebrate strong jobs data, behind the numbers, full-time employment is shrinking, while part-time and multiple job workers rise. It is the same pattern that appeared before every past crisis. Strength on paper, weakness underneath. And history tells us what comes next. This time, the financial bedrock is far more fragile, far more leveraged, and far more ready to shatter under pressure. The yield curve is not just a line on a chart. It is the voice of the economy, whispering the truth before anyone wants to hear it. It is saying that something fundamental is wrong. The bond market, the most conservative, cautious part of the financial world, is preparing for pain while everyone else is pretending not to see it. This is what makes this moment so dangerous. The calm is the illusion. The panic comes later, and it comes fast. If we trace the pattern, the 1928 inversion led to a crash about 17 months later. The 2006 inversion led to one 16 months later. If history repeats, that window would place the danger zone right now. The setup is nearly identical. Low unemployment, high optimism, and a stock market that refuses to believe in gravity. In both of those times, people thought the inversion had failed because nothing happened right away. But when the breaking point came, it hit like an avalanche. The same could happen again. And this time, the impact might be global. Because the world is now more connected, more leveraged, and more fragile than it has ever been. Banks, governments, and corporations are all tied together by the same debt web. One major default, one liquidity freeze, one unexpected event, and the shock spreads everywhere. It will not just be a stock market correction. It could be a structural reset of how money itself works. History has never seen a soft landing from a yield curve inversion this deep. Never. And that is why pretending it is different now is perhaps the greatest mistake of all. The deeper the silence, the louder the crash. You now have the unspoken reality. The bond market is screaming the truth while the stock market is living the lie. You now have two paths. Path one, the illusion path. You trust the gurus. You believe this time is different. You ignore the 100-year signal and get caught in the unfolding collapse. Path two, the glitch path. You trust the signal. You prepare for the crash before it happens. You stand clear of the wreckage while the rest of the world wonders how it all happened so fast. If you are ready for the glitch path, subscribe to this channel now. So, you have seen the signal. You have heard the warnings. You know the choices ahead. This channel is not about gurus or hype or telling you what you want to hear. It is about the unspoken reality. It is about exposing the glitch in the system and arming you with the truth. That is why your insights, your questions, and your perspective are so important. This is not just my channel. It is our community of glitch hunters. We are the ones who refuse to be blindsided. We are the ones who dig deeper, question the narrative, and prepare for what is truly coming. If this video resonated with you, if it sparked a new way of thinking, then do not just hit subscribe. Leave a comment below. Tell me, what other guru traps do you see? What other glitches should we expose? Your engagement helps us reach more truth seekers, more glitch hunters who need to hear this message. So like this video if it gave you clarity. Subscribe if you are ready to join the community that sees through the illusion. And share it with someone you care about who might be caught in the coming storm. Because when the system finally gives in, we will be the ones who saw it coming. We will be the ones who are ready.